Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a look at the gold market. On the gold market, as you can see, our yesterday's suggestion that market has more chance to break down rather than to continue upward action will seem to be correct, because actually the price behavior that we see in recent sessions, so maybe even from the starting of the week, really doesn't look impressive, and definitely it doesn't correspond to the idea of the possible upward reversal. An idea of the double repo pattern that we have talked previously. So as soon as we have got it, it was really very suspicious moment that market doesn't show the action that it should show. So we did not see any signs of the bearish capitulation, but instead of that we see really lazy, choppy and sloppy action, and mostly looks very heavy. And yesterday we made the suggestion that probably based on this mismatch that we see between the patterns and the real price behavior, we're coming to the conclusion that the downward continuation looks more probable. And indeed, market really just hang on strong support there, so we did not see a really significant bounce here. Even 48 area has been reached, so market just stands in sideways in a very tight consolidation above the strong confidence support. So even the confidence couldn't push market high even to the 38 level. So it's a very significant moment. Besides, from the fundamental point of view, you probably know that three banks already have given hints on the possible rate changes. This is Bank of Canada, European Central Bank, and Bank of England. So this is not the clear signs that we definitely will rise the rate, but the speeches that have been announced in the Canadian Canadian Central Bank, it was a bit earlier. So in the beginning of the month, on the European Central Bank, it was just recently, and the Bank of England was just recently. So all the currencies across the board right now shows the reaction on this news, and the gold market could be not an exception, because the rate increase will press on the gold market as well. And as you can see, this market really feels heavy. On the 4-hour time frame chart, as we do not have any meaningful retracement up, and in general, based on this ABCD pattern that we have, the CD leg is really fast. We have discussed this already. Reaction on the 100% target has been completed, so market already shown a reaction. Next destination point that we could get will stand approximately 1222 area, 1618 extension of this ABCD pattern, and this target stands in agreement with the 1224 fib level. This will be next destination point. This will be very important. Also, you can see that overall price stands inside of this long nasty candle. So this usually happens when market gets such kind of the candles. It spends some time inside of it to accommodate to overall new range that has been formed by this candle. And actually, the most important thing when you have these candles is the direction of the breakout. So if market will take it out with these lows, it will be very important, because it could double the size of the candle, and you can see it approximately corresponds to 1618 target. So upward breakout and taking out of the top, this could be in the upward action. But currently, guys, actually I do not see reasons and signs that this really could happen. Actually, if you will take a look also on hourly chart, you will see that here is where you have the symmetric triangle is forming, or you could call it as the pennant pattern. And this, as a rule, usually is the continuation pattern. So it usually leads to the continuation of tendency that has been formed before the pattern starts to form, and means that the pairing of the pen here is called the bearish pen, so it usually leads to the further downward continuation. So that's why, guys, as you can see, currently definitely it's not time to go long, because we do not see any signs to go long, and even the bullish patterns that we've got in the beginning of the week market just has destroyed because by its price behavior. So because it doesn't show the real price action that it should to match the patterns that have been formed. This mismatch and general situation in the markets leads us to suggestion that probably we could get downward continuation, at least chance on the further drop to the 1222 area right now looks more probable than the upward reversal. So let's see how situation will develop here.